Give me 12 minutes and I'm gonna give you every component of a profitable strategy. And there are only 7 of them. And if you're missing even one of them, that's the exact reason why nothing you've built so far ever worked for you. I've been trading for 8 years and I've never seen a profitable strategy that miss any of these things. And no guys, none of them are secret indicators or magical tips. The first one is the reason why most traders don't have a strategy at all. They're just guessing. So the first component to become a profitable trading has nothing to do with the strategy itself, but with your understanding of the strategy. Let me ask you one question. Do you actually know what does a profitable strategy do? Like, you know this pen, it is for writing. Let's say the car will take you from A to B. What does a profitable strategy do? So, because this question is very important, and knowing the correct answer, what actually does a profitable strategy in reality, is very important. Because if you don't know that, you will be wandering around, like you will go there, pick one indicator there, you will come here, take an advice here, take a tip, take a trick, take an indicator, etc. So you will, to the end of the day, you will gather a bunch of different things from different gurus, from different sources on the internet, and to the end of the day, you will just get complete mess instead of a real strategy that is designed to produce you profits. So here's the answer. What does a profitable strategy do? And any strategy, and you need, what do you actually need to become a profitable trader? You need only 2 things. And the profitable strategy does exactly that. First of all, you need to know where the price is going. It's going up, it's going down, it's going sideways. And this is the first thing that you need to understand. And the second thing that you need to know about what does a strategy do is it will give you an optimal entry point. So, long story short, to become a profitable trader with a profitable strategy, you need to know where the price is going, up, down, or sideways, and you need to find an optimal entry point to enter your trade. So, whatever you're doing right now, do you have a strategy, do you have a system, or no? Just ask it. Does my system answer these 2 questions? Do I know exactly, without any doubt, where the price is going and where is my optimal entry point to go in that direction with the price? If the answer is no, you don't have a mechanical system. You don't have a strategy that will yield you profits over the long run. You are just guessing. So now you know direction and entry are about the output of your trades. The next 6 components are exactly what will produce them. So I will give you 6 more components that we're going to talk about, and all of them are going to be about how to find those directions, how to find those entries. So, and the next component that we're going to cover today with you is going to decide exactly what tools you're going to use to identify your direction and your entry points, because this is very important. And the second component, guys, you need to know what type of trader you are. Knowing this is very important because it is going to decide how much time actually you're going to spend for trading. Because most of the people go into the markets, even the experienced ones, don't know about this. This is but in reality, this is very deep thing that you have to think about first. Most people, what they're gonna do, they're gonna learn strategy here, there, but they never gonna think about how much time that strategy actually requires from them to spend. And they only think about the profits, they only think about how much money they're gonna make or how many percent their portfolio is gonna grow, etc. But in reality, and they start building their life around trading. When in reality, to become a profitable trader, you have to build your trading around your existing schedule, around your life, not the other way around. Some of you might be students, some of you might have a day job or a night shift, or you might have after classes at the evening. All of you are going to have your own schedule and the time that you're able to dedicate for trading based on your current life. That is why you need to choose what type of trader you are. So let's go to exactly what type of traders are there. Like the first is scalpers, the second is day traders, and the third is swing traders. And you might be asking, like, which one should I choose? And most of the people, when they come to the markets, they are scalpers on Monday. By Thursday, they are day trading, and on Friday, they are placing some swing trades because the market is finishing, the market is it's preparing to close, so they will hold it over the weekend, like because they cannot trade during the weekend. That is why, but it is completely not true. Let me give you exactly how you can choose that. It all depends on how much time you can spend per day. The scalper is going to require around 2 hours a day. Can you sit in front of the charts for 2 hours and trade? If yes, probably you can become scalper. If for day traders, you're gonna spend 15 minutes a day. And for the swing traders, you're gonna spend 30 minutes a week. And you might be thinking, why the hell do I have to stare at charts for 2 hours a day or even 15 minutes a day when I can just watch the charts 30 minutes in total during a week and make profits? Yes, of course. It all comes down to all of them has a cons and pros. Like with a scalper, you can take 5 to 6 trades a day. Like you might be kind of like making more profits. And as a swing trader, the drawback is that you will be placing 1 to 2 trades a week. Can you imagine that? Recently, I've got a message on Instagram. One girl is typing me like, hey, like I'm a day trader or I'm a scalper. And I'm like taking 5-6 trades a day. And I'm like I'm trading on the 1 minute time frame or 3 minute time frame. And that time frame still feels like, it feels really slow for me. I want something more thrilling. I want something that will give me more actions where I will be placing more trades. So basically, our human brain is designed like this. The trading is a dopamine-rich activity where you are placing trades. It's like gambling, guys. Just let's be honest. So when people trade, they get excited about trading. That's why they want to trade more. So will you be able to wait for a whole week just to get 1 to 2 trades? Or is it okay for you not to take trades during a week at all? Probably most of you are going to tell me like, no, that's not. That is why, guys. That is why I would suggest everyone to start day trading. And then when you become master of the day trader, probably you can start taking some scalp trades when you become super experienced. And in the future, you might transition to the swing trader when you make a lot of capital, when you have enough capital. And ideally, I recommend people to have different accounts, like for swing trader 1 account, for day trading 1 account, for the scalping 1 account. So you will not be mixing them up, and because every other strategy has its own results that you don't have to mix up. Okay guys, there's one very important thing that I have to mention here. This is an applicable tip that you can start, like let's say you have chosen yourself, you want to be a day trader. Here's the applicable tip that you can do right now. Each type of trader has its own time frame. Like if you open the trading view, there's going to be dozens of different time frames. Which one you're gonna choose? Probably you do the top-down analysis, you use multiple time frames, but that is exactly why you are broke. You have to stick to only one time frame. For the scalpers, that is going to be 3 minutes. For the day trader, that is going to be 15 minutes. For the swing trader, that is going to be 4 hourly time frame. All of your trades, all of your analysis, all of your entries, exits, everything must be done on these time frames. If you're a scalper, you do your analysis, you take your entries on the 3 minute time frame. If you're a day trader, your chart is a 15-minute time frame. If you're a swing trader, your chart is a 4 hourly time frame. No mixing up, not using multiple time frames. You might be thinking that is a thoroughness, but in reality, you're just creating one big mess. Just trust me. Stick to one time frame and you will at least double your win rate. Okay, folks, let's move to the component number 3. And you right now know what type of trader you are and what time frame you have to use to become profitable. And the next step is exactly why most of the traders, they burn up, like even if they know their time frame. And the third component is you have to know when to trade. Because if you're placing the right trades during the wrong time, there is nothing even worse than that. Like, furthermore, majority of traders, they don't even know when to trade. That is why they are going to stare at their charts for 8 hours a day. You're studying, you're working, they are always like checking the charts. But that is bullshit, guys. That's the worst decision that you can do. You are not over trading, revenge trading, or becoming greedy. You're not a greedy person. You just need a couple of $100 a week from trading. You are doing all of that because you're trading during the wrong time and you don't know when to exactly trade. Let me give you a great analogy for that. Let's say you say you're gonna diet from today. You're not going to eat any junk food. You're going to be at a calorie deficit and you're going to trade. But let's say you said, I'm starting the diet now, but you go and buy the pineapple pizza, put it in front of your mouth and said, I'm dieting. How does that feel? First of all, to become disciplined, you don't lack the discipline. To become a disciplined person in anything that you do in your life, you have to create the environment, the right environment that will help you to do what you want to do. If you're starving and looking at the pizza, it is not going to help you. And the same thing here. If you want to trade, if you have a gambling addiction to the charts and you're staring at charts, it's the same. It's not going to help you. That is why you need to know when to trade. Okay, guys, let me give you a real actionable tip how to do that. What to do. Not all of the sessions are equal. The Asian range is going to range. Asian session, sorry. It's going to range. The London is going to manipulate. The New York is going to distribute. Probably you heard this millions of times before. Or if you're a beginner, you didn't heard that. And guys, we do have 4 different sessions. We do have the Sydney session, we have the Tokyo session, then comes the London session, then comes the New York session. The 2 of these sessions, the Sydney and Tokyo, are the quietest time of the day. And the London and New York sessions are where most of the volatilities happen. The London Stock Exchange and New York Stock Exchange, they are the biggest one. And plus, even if you're trading, let's say the Forex, the London and New York Euro USD stands for, if I'm not mistaken, 40% of all of the transactions in the world. And GU, GBP USD, stands for the other 30% or something like that, or 20%. Or so the pairs that are related to the London, to the Europe, and to the New York, America, they make up like 70-80% of all of the trades, all of the volatility. So that is why, logically thinking, all of the volatility comes for the London and New York sessions. All of the price action is going to happen here. If you're going to implement your strategy here during this Tokyo or the Sydney sessions, you're going to get chopped because the price is not moving. It is just playing around, up and down, up and down. During London and New York, we have a real action where we have to actually trade. So guys, this is exactly it. And not all of the sessions are equal. So what do we actually have to do? I have been trading for over 8 years. And I can tell you guys, all of the best entries that I get with my own strategy happen at the first 2 hours after the open of the London and New York sessions. So as a day trader, we all trade on the 15-minute, right? You open your charts at the 15-minute time frame, let's say at the beginning of the London session. Do you have a trade? Yes or no? Okay, it's not developed yet. You close your charts, go and do your stuff. You come back after 30 minutes. You open your charts. Do you have your setup? Yes or no? No, let's say. You come back after half an hour again. Do you have a trade? Yes or no? There's a setup. Okay, you've got a trade. You place your entry, pending orders, and then you leave the charts. You come back at the New York session. Did it hit take profit, stop loss? Okay, that's all. During the New York session, you look for the entries. and come back every half an hour. If there's no trade, you're not gonna trade for that day. This is exactly what you do. And if you stick to this, guys, you will eliminate 99%, okay, 90% of all of the trades that you would have taken otherwise and lost your hard-earned money. But still, some people, knowing that they have to trade during the first 2 hours of the London and New York sessions, they're gonna take 10 trades. 5 trades at the open of the London session and 5 trades during open of the New York session. And that's interesting. They will blow up their account fast. Instead of like blowing it up during the whole day, they're gonna do it much faster. So the component number 4, every profitable strategy tells you exactly how many trades you are allowed to take. It has a trade cap. And capping your trades is not exactly, it's not restriction. It is just protection. And without that number, every okayish trade is going to be a trade that you are going to take. And a lot of people are going to think that they will project their beliefs about the regular world into trading, where in regular world, the more you trade, more you work, more you're going to get rewarded, more you're going to get paid. When in reality, in trading, that doesn't work like that. The more trades you're gonna take, the more time you're gonna spend in front of the charts, you're not making more money. You're just exposing yourself for the more human error, for the more unpredictable market conditions that are going to kick your ass, and you're going to expose yourself to more losses. That's it. So what do you actually have to do? According to my experience, over the last 8 years, I found out that you are going to have only 1 to 2 trades per the reference point. And that depends on the type of trader you are. Let me show you. This is it, guys. As I told you at the beginning of this video, I told you that as a swing trader, you're going to have less trades. As a scalper, you're going to have more trades, but you expose yourself to more losses. So as a scalper, you're going to have 1 to 2 trades per session. So if you're trading the London and New York, total in day, you're going to have 4 trades and 2 trades per session. As a day trader, you're gonna have only 1 to 2 trades per day. And as a swing trader, you're only going to have 1 to 2 trades per the whole week. And this is not a guarantee that you're going to have them. For example, as a scalper, not all of the sessions will be tradable for you. Like the London, there's no guarantee that you're gonna have trades during the London as well as during the New York. And for the day traders, there's no guarantee that you're going to have trades every single day. Day trading doesn't mean that you have to trade every single day. That's the biggest lie that is sold to you by this industry. Why? Because they are partnered with the brokers. The brokers make money from your lot size, from the lots that you trade, from your commissions. They are interested for you to trade more. But in reality, even as a day trader, you're not going to have trades every day. A clear example from my own trades, from my own strategy. We only have 2 to 3 days, 2 to 3 tradable days during a week. So we do have 1 to 2 trades a day, but only 2 to 3 days a week, we're going to have those 1 to 2 trades. Interesting, right? So this is exactly the same for swing traders, and you're going to have only 1 to 2 trades per week. Not all the weeks are tradable. So basically you're going to have only 1 to 2 tradable week a month. Do you have so much discipline, so much patience to become a swing trader? If not, you better stick to the day trader or scalper. But it's better to start with a day trading and go into the scalping and then swing trading. But the day trading is the best place to start. So now you've got the charts, you've got the numbers, you've got the time frames, everything. Let's move to exactly where to enter your trades. This is a part probably most of you are here. Let's move into the charts.
This is a Euro USD on the 15-minute time frame. This is 3rd January, and we do have the breakout to the upside. As you can see over here, the price is coming back and retesting the 60% retracement level of the FIB levels. The stop loss is going below the 80%, and the price is giving us a beautiful 6-hour trade. This is called the OP Investing Method number 1, and we are going to do a full month's backtest with it, and I'm going to show you a bunch of backtests where it worked, where it didn't, why it worked and why it didn't work, and how to find an extra confluences, how to make this strategy actually work. Probably the most of you heard about the strategy which is called the orb strategy, opening range breakout. That is a really mechanical strategy, but the only difference between our strategy and that strategy, our strategy is ARB strategy. That is the Asian range breakout strategy. With the orb strategy, all you need is to just mark up the only one candle and then trade the breakout from that single candle. But with ARB strategy, with OP method number 1, we are trading the breakout from the whole session, or let's say the first 4 hours of that session. Okay guys, maybe you're wondering what the hell is those vertical stripes, the gray one, the green one, and the pink one. This is a sessions indicator which helps us to identify the first 4 hours of the Tokyo session and the first 2 hours, the beginning of the 2 hours of the London and the New York sessions. As you can see over here, the Tokyo from 20 to midnight. By the way, guys, you just need to go to the indicator sessions and just type the sessions. This is what we are going for. Sessions on chart, our AIF 9.6k. So basically this is the settings of that indicator. Just copy this one by one, and this is a style like that I prefer following. After that, you're going to get these vertical stripes, the gray one, the green one, the pink one. All you have to do is just to draw the high and the low of the price action during the first 4 hours of the Tokyo session. So here's the first candle, here's the last candle, as you can see over here, and this candle over here created the highest point, the maximum point of the price action, and this candle over here created the minimum, the lowest point of the price action during those 4 hours. Basically, this time range is going to go as our price range. And basically what we need to trade with this strategy is to wait for the price to break out from this range and retest this range during the first 2 hours of the London or the New York sessions. That time we're going to get the highest probability, the best trades ever. And there are a couple of more kind of like the confirmations that we trade, that we use to get. I will be covering up all of that just as we proceed further, as we do the backtest. Okay, let's get started. Okay, as you can see over here, we did this setup, like we have covered it, like how it was. Let's move to the next day. Okay, here we have the 6th Jan. The price is just basically breaking to the upside, but it's never coming back to retest our Asian range. So we do have the breakout, but we don't have the retest, so we don't have a trade that day. The next day, the price is breaking up and it is retesting and reversing from this previous day high candle. And guys, basically this is a different story. And one of the first confluences that I teach inside our mentorship program is this, guys. When we do have the breakout from our Asian range, ideally we want to see a retest of our Asian range first before the price goes and retests any extra kind of like the outside level. In that case, guys, there will be a higher probability of OP method number 1. But in this case, the price is breaking out and it's retesting the outside level directly. That is why we do have another trade, which is OP method number 2, guys. More about this strategy, I will leave the link below how you can learn about this one. So let's get next. As you can see over here, we are having some sweep of the Asian high before the London session. As you can see, this green zone is that London session. That's why during the London session we are breaking to the downside, but we are never coming back to retest our Asian range. That is why we are just living this day. And the next day, guys, over here again, like the price is breaking to the downside and it's going like exactly into the previous day low, and it's retesting that. Like, it's not giving us the OP method number 1. And by the way, guys, I totally forgot how you are going to enter this trade. Basically, we do have the Asian high, we do have the Asian low, we do have some price action over here. The price is breaking to the upside, let's say, and when it's coming back, guys, all we need is to get our FIB levels and draw it from the bottom of the breakout of the bottom of the Asian range to the top of the breakout. So basically, and you are going to place your entry at the 60% or 70% or sometimes 80%. Basically, for those who are beginning right now, I would suggest you to break down your trades into 3 parts: 60, 70, and 80. Your stop loss can go below 100%. When you are entering at the 60%, your stop loss can go below 80%. That is going to be like the best. But if you're entering at the 70% or 80%, your stop loss is ideally should be below the 100% fee levels. And guys, most of the times the price is going to give you 5R with these trades. Sometimes more, but not always less. Like 80% of the times it's going to give you 5R. That is why this is called the 5% strategy per day, because you're going to get like 5%. Like if you risk 1% on this trade, you're going to win 5% with it. Okay, let's move forward. Over here, as you can see, we do have the breakout to the downside. We are placing our trade, like we're drawing our fee levels from the high to the low. We're placing our trade at the 70%, and the price is just sweeping this high and then just going to the downside, like in our direction, but without us, unfortunately. So we do have some losses. This is not some holy grail strategy, guys. The next day, guys, basically we do have the breakout, we do have some range, the price is not coming back to retest. So usually we do take our entry during the first 2 hours of the London or the New York session. The rest of the time, as you can see over here, basically we don't trade. We just close our trades, close our charts, and leave our day. That's why basically trading this strategy, all you need is just 15 minutes a day. Like whatever job you do you work in office, do you work outside, all you need is to check your charts. You can do that by phone as well, guys. Like ideally that's a laptop or the computer, but you can do that by phone as well. You don't need much time. You do the analysis once, you set your trades and forget about the charts. That's all. It's set and forget strategy. Okay, folks, this example, we do have the breakout to the upside. The price is coming down and retesting the 80% retracement level and then going to the upside, giving like a beautiful 5R trade. The next day, guys, the price is breaking to the downside before the London session, and then we are having a really nice breakout to the upside. Then we are entering at the 60% retracement level. The price is giving us entry once during the London session and twice during the New York session. The price is retesting and then boom, and it's giving us a beautiful 7R trade over here. Beautiful. Okay, let's move to the next day. We do have the sweep trade. As you can see, we have the sweep here. It's a OP method number 3, guys. This is a third strategy that we trade. And of course, if you want to learn more about that, I will leave the link at the end of this video for the next video where you can learn more about all of the 4 strategies that we trade daily to scale our trading to 6 or even 7 figures. Okay, this is OP method number 3, and next what we are having OP method number 2 over here. And by the way, guys, we are having the breakout to the downside, but we are not trading this OP method number 1. Why? Guys, I only teach this to people inside the mentorship, but I'm feeling so generous today. So that's why, look, the context while you're trading is a king. And we have to look at the previous day candle over here. How does it look like? It's going to the downside and it's going to the upside. It's a V-shaped formation, guys. It's a V-shaped formation. If you open this on the daily time frame, it is going to look like this, and it's a pin bar. And what happens during this pin bar? Like most of the times, there's a very high chance, like 60% chance, that the next day is going to be bullish. The same happens here. Kind of like ideally, when we do have the V-shaped formation to the upside or inverse V-shaped formation to the downside, we look for the trades in that direction, in the direction of the reversal. So in this case, we either look for OP method number 2 from the previous day candle in the direction of the reversal, or we look for OP method number 1 to the upside. But in this case, guys, the price is just giving us OP method number 2 from the previous day low. So the context is the king. And basically the next day we are having the breakout, but kind of like the price is not giving us the entry on the FIB levels, you see. But like in the past, those people who know more about the OP investing methods, we had something like the break block, the candle that created traded the Asian high and the Asian low. That is considered to be as the breaker block, and we used to trade this, and our students trade this. Like, we do have more about this inside our mentorship program. And as you can see over here, 50 hour trade, guys, breaker block entry. But yeah, this requires a little more time, a little more screen time, like, to trade it, you know. Personally, I love my freedom. I didn't start trading just to be a slave for the charts. I got rid of my 9 to 5, my full-time job, and I'm happy that I'm free and I can spend my time with my family, with my wife, with my children, and that's why I prefer trading with the fib levels. But you can trade with this one as well. The next day, guys, basically this is again like the Asian range is a bit extended. We don't have a nice breakout to the downside. We do have the breakout to the upside, but it's already too late to trade it. Like, this is not during the first, like, 2 hours. Okay, here again, like, the breakout size, or here the breakout size is a bit too much, is a bit too high, and that is one of the confirmations. And this is a little secret that you can learn inside our mentorship program. All the links will be below. The next, we do have the OP method number 3 day, giving us almost 10 hour. The next day, the price is breaking to the upside, never coming back to retest. The another day, we're having the OP method number 3. The price is ranging the next day. Nothing interesting. Like, okay, like, even if you wanted to trade the OP method number 1 over here, like, that would have been a pretty good entry at the New York session. As you can see over here, the stop loss would have gone here, but your take profit only would have get hit only the next day, you see. So, like, basically I don't trade such stuff. Even if I've entered here, I would have closed somewhere here. Like, I don't like uncertainty. This over here, we do have this breakout to the downside. My eyes are super trained to identify the Asian range. Probably it is not that obvious for you, but over here we do have Asian low, and over here we do have the Asian high. Okay, we are having this breakout, but the price is never coming back to retest the 60%, and instead it is retesting the breaker block over here, as you can see, and the damn breaker block is giving us crazy trade. Crazy. How a 10-hour trade. 10-hour trade. Guys, even risking 1% of your capital, this one trade can pass you any challenge. And the next day, you see, again, what does this look like? This is a V-shaped formation, right? And the next day, we're getting the OP method number 2 from the previous day low, and we are filtering out this trade, this OP method number 1 here. We're filtering out. How? Because we know about this confirmation, guys, and we have more confirmations inside our mentorship program, how you can get a higher chances of trading the OP method number 1 or number 2 or number 3 or number 4, and combining all of these is going to be crazy. Okay, the next day, 31st January, we're wrapping up, and over here, look, we are breaking to the upside, but the previous day candle looks like a V-shape reversed. We're breaking to the downside, and we're entering at the 60% and getting stopped out. So this is what's happening on the 31st, and on the 3rd February, the next day, again, like you can see over here, this is Asian range. We are having this breakout to the upside. The price is retesting 60% and giving us a beautiful 5-hour trade. It's always 5-hour. The next day, we're getting the OP method number 2, and so on, guys.
Okay, folks, now you know everything about the entries. Now it is time to talk about your take profits. And why exactly take profits when everyone on the internet, they are stressing about the stop loss? Like, you need to place your stop loss correctly, etc., etc. But in reality, just guys, think about that. Are you making your money at the stop loss? This might sound absurd what I'm talking about right now, but think about that. Are you making your money at the stop loss? No, you're making the money at your take profits. Let me tell you a short story about how I actually become profitable after years of losing money. One day, I'd lost my another funded account, or it was just a regular broker account. I'm not sure. I went to my mentor and told him, like, I started weeping like, shit, I'm unlucky, I'm a loser, etc. And he told me like, hey, damn, take your trades, take your journal. And I'm like, what journal? I'm not journaling. He's like, shit. Take your MetaTrader, open your history. And we started reviewing my trades one by one. All of them. I was so embarrassed at that moment. But that moment is exactly what changed my life. So what happened? We saw that majority of my trades were actually like, we started analyzing my losing trades. And we saw that 40% of all of the losing trades, they went straight into the stop loss. Like the price went to my entry and hit the stop loss. Okay, that happens. That's a price that you pay to be in the trading business. That's a part of the game. There's no holy grail. But the other 60%, here's the interesting part. They were in a good profit before reversing back and hitting my break even or stop loss. Only if I could if I took the profits at the right time, at the right amount, I would be mega profitable trader. Only at that time. What did I do instead? I was aiming for 10-hour trades, 20-hour trades, 30-hour trades. My eyes were blinded by all of the social media crap that told you that you have to make, that the one trade is going to change your life. But all of that is crap. And guys, all of the ICT traders, SMC traders, and other traders who trade other strategies, they all try to aim for the very big take profits. When in reality, your risk to reward ratio, RR, and your win rate, how many times you're actually winning over your losers, are negatively correlated. The higher is your RR, the lower is going to be your win rate. That's exact phenomena. The ICT, SMC traders who aim for 1 to 10, 1 to 20 hour trades have a win rate lower than 10%, lower than 5%. Okay, they're making 20 hour per trade, but they're losing 19 times out of 20. Maybe fair enough. But as the experience shows, the human brain, your psychology is not able to handle that amount of losses. Just be honest with me. After how many losses? After 2, 3, 5, 10, you start thinking, am I doing everything right? Maybe I'm a loser. Maybe I don't know how to trade. Maybe my edge stopped working. Maybe. Nothing that I'm doing is working. Maybe I have to change everything. And that is exactly what is killing your trading. That is exactly why you're strategy hopping. When in reality, you just need to aim for less. That is when you aim for less, let me get this. When you aim for less, your win rate is going to go up. And according to let me give you real numbers that work in reality. The best risk to reward ratio with the best win rate is aiming for 3 to 5 R. This RR is going to give you about 50% win rate. When you're winning every other trade and making 3R 3 times the amount you risk, you're a mega profitable trader. Guys, no matter strategy you're trading, today I gave you the basics. No matter strategy you're trading, start aiming 1 to 3, 1 to 5. 1 to 5 is actually very good, but start with a 1 to 3. You're gonna thank me later. Your win rate is going to improve a lot. So going back to the story, guys, all of my 60% of my losing trades, they were in a good profit. So what did we do? When we analyzed them, they were like in 20, 30 pips in profit, and we were thinking like, what's common between them? Why 20, 30 pips? Why 20, 30 pips? And he told me, bro, that is why it is so important to have a mentor. And he told me, bro, the average pair I'm trading the Forex pairs move around 60 to 70 pips a day. So like if you measure the previous day candle from the toe to top, it is going to be 60 to 70 pips on average. There's even indicator which is called ATR, average true range. If you open that on the daily time frame, it is going to show you the average amount of pips that price moved for the last 14 days. And for the major Forex pairs, that is around 60 to 70 pips. And he told me you're aiming for 100. You're aiming for 150 pips take profit. How? Do you think like the price moves on average 60 to 70 pips? How it is supposed to hit your 150 pips take profit unless there is no NFP, it is not NFP or like interest rate decision day. It is not possible. It's against the laws of the nature. Are you getting my point, guys? And he told me, we came to the conclusion that we have to take the ATR number, ATR, and break it into two. You just take the whatever the ATR tells you on the daily time frame and break it into two. For the swing traders, you're gonna use the ATR on the weekly time frame and break it into two. And for the scalpers, you're gonna use that on the 4 hourly and break it into two. So let's say if the ATR on the Euro USD 70 pips, your maximum take profit must be no more than 35 pips. Guys, this is very important. So now guys, you've got all of the 6 components, and still everything that you have done so far, if the 2 different people are looking at your strategy right now and having a different result, having a different trades, that means it's all crap. Your strategy is subjective, and having a subjective strategy where everyone will have their own trades, you will never be profitable. Maybe there are some exclusions in the market, like the guys who are kind of like psychics, or they have very good intuition and they might be profitable for some amount of time in the market. But that's not the truth. That's not what works on the long term. You need a strategy that is 100% mechanical, that makes everything that you have learned so far work, in reality work. If the 2 different people using the same strategy are getting 2 different results, it's not mechanical. It is subjective. And subjective strategy means that you are still guessing, just with more steps, with those 6 steps that we have talked with you today. So to become a consistently profitable trader, you have to to get a consistent result, you must do consistent input into the market. That's when you can expect consistent outcome as well. Okay, let's not play around and go into the solution right away. How we can take any strategy out there and make it 100% mechanical. And it all comes down to a very, very simple fix, which is time. I'm not talking about like the movie Inceptions by the Nolan. No, time. You have to tie up everything what you do, your strategy, to the time. And as we have talked with you, we do have the 3 core entry models: the breakout and retest, supply and demand, and liquidity grab. Let me break down each of them, how we can make them mechanical by tying them up to the time. Breakout and retest. Let's take a very easy example of the ARB or orb strategy. Maybe you don't know about the ARB. That's why we're going to take the orb strategy. What does the orb strategy does? It takes the first 15-minute candle at the open of the New York session, and you wait for the price to break out either to the upside or to the downside, right? So the first 15-minute candle is the same for you and me. The New York session is the same for you and me. We can have the breakout up and down, which is going to be the same for you and me, right? You're going to have only 2 trades a day. You're going to trade during a specific time of the day. All of that rules, even your grandma can learn them and start implementing it right away. This is exactly what makes the strategy mechanical. And let's talk about the liquidity graph. How we do, like spotting the different highs, different lows, different like equal highs, trend lines. It's all bullshit. Again, we have to tie up the liquidity levels to the time. And how we do that is easy. We just need to choose the levels based on time. What are those levels? Ideally, that is previous day high, previous day candle high, previous day high, previous day low, previous week high, previous week low, Asian session high, Asian session low. Those levels are the same for you, for me, and for anyone else. And those levels are so major, so key that they have reversed the whole daily price movement. And if you go to the charts and backtest them, you will see that the price reverses from anywhere around, like from the equal high, whatever the shit that they are going to use. But still, if you need the key points, the key levels that holds a lot of liquidity, you have to trade the previous day high and lows. They are going to work best. Let's talk about the supply and demand levels, how we can make them mechanical. And that is not as mechanical as these, but still it makes them, but still they kind of become mechanical. How? Let's say there are some price action lag in the charts, what the regular traders are gonna do, they're going to look at back like for the levels that are two weeks old. You start on the weekly time frame, identify your levels, go to the daily time frame, identify the levels from the previous months, go to the 4-hourly time frame, identify the levels from previous week. What the hell is that has to do with your day trading? It's irrelevant. All you have to do is just to look at supply and demand levels only inside of the previous day candle, which is this one. This period, this stuff is the previous day candle. And you're going to have only handful of levels, like you're going to have one level here, one level here, one level here. One supply, only. And all of those supply levels, demand levels, demand levels are going to be the same for you, for me. Or at least, even if we identify them a little bit differently, but still, we will only have handful of levels, only 3 instead of 300. When you identify and get the levels from all of the past, from all of the chart. No, you don't need that. You need the reference point. And the same for the swing traders. Look for your levels inside of the previous week candle. And for scalpers, the scalpers, they can use this one as well on the daily. So this is exactly how you take any strategy, any entry method and make it 100% mechanical. So guys, these are the 7 components, how to build a fully mechanical strategy. And that exact way I am using right now to find 1 to 2 high quality trades every single morning. And if you want to learn more about how I do that personally with my students, check out the first link in the description below. See you inside.